Hello everyone from Chicago. It's Monday, October 26th. I'm Charles Brown for StockCharts TV. This is your Daily 5 and Portfolio Management with RRG. CB3 Financial is a registered investment advisory firm here in Chicago. We're basically a family office. We trade our own accounts as well as select clients that like to follow our methodology. You can find out more about us at cb3financial.com. We hope that you'll watch our weekly live Thursday and Monday night broadcasts as we cover COVID-19, the markets, and of course, the political season and how it affects our investments. So right now, let's look at the Nasdaq, the S&P, the Dow, and the Russell. This is year to date as of last Friday. Pretty big gulf between the Nasdaq and the Russell, right at 30%. Although it is less of a spread than it was a few months ago. So the other asset classes, the S&P, the Dow, the Russell, catching up to the Nasdaq, but still a long way from it. We want to be in the Nasdaq as far as using that as a benchmark. So it's working out for us. This is our growth program, which I've talked about in previous episodes. CG, which is capital growth, up just short of 40% for the year, really killing the benchmark S&P. Again, we use the Nasdaq as our benchmark, which I'll tell you more about in a second. But what we're going to talk about in this episode is diversified growth, or DG, only up 15.5%, still significantly beating the S&P, but with far less beta, i.e. far less risk. So let's look at this and how we make our decisions. So I really have two indices that I track, and the S&P 500 is what we use for clients because that's what they're familiar with. But if we use that for our own, essentially race inducer, in other words, to keep us ahead of the market, we're going to set the bar too low because the S&P has dramatically underperformed this year, as you all know. So we're going to look at the 1 year 4 indice, Nasdaq 100, the S&P, the Dow, and the small cap. And this just tells us we're on track. We're where we need to be. We need to be benchmarking our own performance to the Nasdaq 100. So we'll look at a chart next, and I like this about StockCharts for moving averages here, as well as the Keltner channel, which tells me at a glance, if we go back quite some time here, almost 15 years, that we've barely touched or broken, I should say, the 20-month. That's the 20-month moving average just a few times, and we're now significantly above it, pulling back a little bit from that, which is expected actually, because we just finished September. We're coming through the end of October here. These are traditionally not strong months. It gets much better in November and December. So this tells me that we need to still be 99% long in our program with 1% cash. That's what we use for our decision process. So the next thing I'll do is look at the RRG for growth value Dow and small cap. Now that's an interesting collection of ETFs there. But this is versus the SPX. And for those of you that aren't used to seeing this, if you've been following my program, you know that I use RRGs, or relative rotation graphs. This is the technology that was pioneered and developed by Julius de Camponar. And I would strongly suggest that you familiarize yourself with this to get the full value of your StockCharts subscription. What this tells me, look at the green circle there, is IWF, which is growth, is the farthest to the right, even though it's in the weakening quadrant. It is the farthest to the right of the 4 asset classes, and it's where I want to be. I'm not moving to value, not really interested in what's happening in the Dow, and definitely not interested in what's happening in the Russell 2000, although small caps have made some progress, but still not a place I want to be right now. So once I know that I want to stay and grow for this program, now we're going to look at the major asset classes versus VBINX, which is an international stock bond ETF that's 60% stocks, 40% bonds. What this tells me, again, at a glance, and that's why I like RRGs, you get so much information at a glance. QQQ, which is our Nasdaq, weakening, SPY weakening, DIA, IWM all weakening. I got to look at DJP. I'm really not a commodities person, but there's really no way to ignore this. It's in the leading quadrant, even though it's losing momentum. But QQQ is still the farthest to the right on the RS ratio scale. So that's where we need to be with growth stocks and particularly tech stocks. Next thing I look at is the 11 sectors and how they're doing versus the S&P 500. Well, what do we got going on here? So we've got XLK, we've got XLY. Those are the farthest two to the right, again, on the RS ratio. Those are the ones that are most strongly beating the index. And the index is the SPX. Remember, SPX is what the clients see. INDX is what we're using as our internal motivation to be a top performer. The next thing I notice is that industrials, which we added to in our CG program the last week and last time I was on, continuing to do well, moving straight into leading, liking that a lot. And I'm decided to add a little bit more industrial exposure in this program. Communications weakening, that's concerning me a little bit. We dropped the percentage weight in our ETF in this program in XLC, but we're still strong in XLY and XLK. Now, I can't ignore XLB because there it is. It's materials, which is the representation for commodities. So I'll show you in another slide or so how that plays out and how we have a little bit of exposure there. The next thing I'm looking at are the current holdings. So we've got XLI, we've got IYT, that's transportation. Now that has been coming on strong. We've added to that over the last month, starting to weaken a little bit. You can see it losing momentum, but as far as the ratio, it's still pretty far to the right. We like that. But on the far right, what's the farthest to the right? Well, silver. It's just that silver has made this very dramatic fall from out of leading. At one point, silver was 8% of our holdings in this particular program. It's now down to 3% once it crossed into weakening. But it's still pretty far to the right on the RS ratio, so I don't want to be flat commodities. Remember DJP that was a few slides ago looking strong. So we still have a 3% weighting here. But is there anything else that I really am interested in? I'm okay with where we are in our other holdings here. We know this is a traditionally weak time of the year. This particular week is among the weakest of the entire year. We have reduced our size in XLV and IBB, but because they are pointing due north, and yes, I can see they're in lagging, but they're pointing due north, which for me says that means they're trying to make a run out of lagging into improving, and then I'm hopeful they'll head back into leading. What could cause that? Well, a vaccine by one or two or more companies. You might not be aware of this, but as of this recording, I think there are about 40 companies that are in the running for this vaccine, and I think more than one is going to come up with a COVID-19 vaccine. Now, the ETF won't move as much as an individual stock would, but there's also less risk because IBB could get a nice bump with a vaccine being discovered. Before I decide to close down the program and make no more changes, I'm going to look at my Bullpen and the other ETFs that are in there and see if there's anything that looks attractive to me. I'm considering a solar ETF. Probably should be looking at that by November 1st, I'm thinking. Because even though I don't want to be in energy, look down here in the lower left-hand corner in lag. I mean, it's almost falling off the chart. Energy's been a massive disappointment. At least fossil fuel energy has been for the last year plus. And we haven't had any holdings in energy at all, with the exception of some solar and renewable energy. And we're going to be looking at an ETF for that, which I'll probably be reporting to you the next time I talk about this program. So that's what we've got for you this week. You can find out more about us at CB3 Financial. Again, I have a live program on Monday night and Thursday night, 7 p.m. Central, where we talk about COVID-19 and how it's affecting the market, politics and how that's affecting the market, and then, of course, basic market indicators and what we're doing to make the decisions to manage the money for the clients we have that might interest you. So thank you for joining. Again, I'm Charles Brown with CB3 Financial, where we don't just manage your assets, we become one of them.